You noted that this comes after Vanguard ETF assets attracted about $305 billion in inflows last year. So I guess that raises the question, why is Vanguard doing this? Because it can?
Basically, I mean, and I want to bring in the man himself, Eric Balchunas. He wrote the book on Vanguard, but they have this unique corporate structure where their fund shareholders actually elect board members, and as such, basically any extra cash or assets that they generate are funneled towards lowering fees, and it's just been this consistent crank lower when it comes to those costs.
Yeah, like if you lived in an apartment complex with a bunch of people and you were all on the board and you had all this extra money, you'd probably say, let's just lower our rents.
Yeah.
You know what I mean? That's what you would vote on. It's the same deal. Other companies, if you're publicly traded, like BlackRock, you've got shareholders who want more revenue. And that's at odds with the investors who want more of their money. So you've got this two masters problem all across the board. It's tough. And I feel for Vanguard comes along, has this one master structure, and it's just hard to keep up with that. But that's what makes them special. And I think that's also what has built up the trust. Because now with these cuts, they're not the cheapest still. Even with the cuts, there's ones cheaper.
Right.
But the trust factor is what some of the other ones don't have, at least in as much quantity as Vanguard. And I think that's why they still continue to win the flow war.
I also really like there's a little bit of palace intrigue here because Vanguard has a new CEO, Salim Ramji, formerly the CEO of BlackRock. And when he took over as CEO of Vanguard in July, one of the issues that was raised that he would have to work on is customer service. So it's been interesting to see the reaction online to these fee cuts. One flavor of reaction is basically that maybe they shouldn't be focusing on lower fees here. They should be investing more in the business. And Ramji did tell me, I mean, it's a balancing act.
It is, and that was, we had written a note saying, Ramji, don't worry about the fee cuts. Everyone's pretty happy. Work on the tech, because when I wrote the Bogle book, I found that their Achilles heel, if they have one, is customer service. Their Yelp.com review is not great. It's like the same as Walmart in Philly. Then you've got even the Bogleheads, people were complaining. And I've heard of some people going to Fidelity's site and then investing in Vanguard ETFs there just to get the customer service. So this is a real issue for them. And it was interesting, he pointed out that some money went to tech first.
Yeah.
I would definitely have done that, and I would continue to do that.
Nevertheless, they cut fees, and you wonder whether we're going to see a revival of the fee wars, right? I mean, that was a big deal. It felt like 5 years ago, and then it kind of, I don't know, stalled out. And maybe that's because we've seen the rise of active ETFs, which, of course, carry bigger fees. But are competitors going to feel compelled to follow Vanguard lower?
That's the expectation here.
Yeah, at this point, it's you want 9 to 8 basis points. I don't think people care that much, but what I do think happens is like in the Bitcoin race a year ago, when they all got into this fee war before they launched, now everything's like 20 bips. That was like the Vanguard effect. So this is all playing out in categories where it is a little more expensive, active, crypto, thematic. That's where I think you'll see the more drastic fee cutting going on. But in these beta areas, I mean, at this point, you can get almost any big issuer now for 6, 7 basis points. And then in the large cap area, 2, 3, some are even free. So I just think it's a little less drastic, and it doesn't resonate quite as much in those beta areas.